welcome again to this particular session. Actually, when I was just coming down into the class, one of my students actually reminded me down here actually that we have forgotten something in this particular account. So let me rectify that actually. It seems actually some item has been skipped. Yes, one item after goods returned by debtor that is given to you is 800. Then there is one item. Goods returned by branch to head office. Unfortunately, I could not write it. 2000 that is written down here. So you will have to write the loading also, which you can manage. In fact, no doubt about that. But at the same time, mistakes should not creep from our side also. So you please rectify it. And sorry for the inconvenience. Now, as promised, after this particular what we call question, you should be in a position to do all 21 questions. So now we shall move over to other part. And it's a very formidable, it's a very important part, no doubt about that. So, next part is stock and data system. Stock and data system. So we have already completed comprehensive discussion on what we call data system. Now we shall move over to stock and data system. It's a comprehensive topic, no doubt about that, and most of the questions in the examination are striking from this particular topic. So it's important, its importance cannot be what we call underestimated. So, as far as stock and data system is concerned, this is the second session for the day. First session was pretty long, no doubt about that. So, stock and data system, this is the second session of the today's class. Stock and data system. Under this session, we are going to have a discussion on stock and data system. So, what sort of discussion we shall have under stock and data system? So as far as stock and data system is concerned, most of the things are already known to you, that it is also a part of dependent branches. It is part of dependent branches. This system is part of dependent branches. It is part of dependent branches. Part of dependent branches. Part of dependent branches. It is part of dependent branches, no doubt about that. It is also not a full-fledged double entry system. It is also not a full-fledged double entry accounting system. Even this system is also not a full-fledged double entry accounting system. Full-fledged double entry accounting system. 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 Next part is, it is also not a full-fledged double entry system. This system is generally adopted by this system is generally adopted by organizations having large but not so very large scale of operations. large but not so very large scale of operations. Large scale of operations. Scale of operations. This system is considered better. This system is considered better and wider in comparison to data system. Under this system, gross and net profit can be separately arrived at and strict control could be exercised over branch stock. So, stock and data system, as the name is suggesting, this is pretty wide system in comparison to the system which we have just did a while ago. Under this system, both what we call gross and net profit can be separately arrived at, and this luxury was not possible in case of what we call earlier method, where we were able to compute only the net profit. And another advantage which accrues under this particular system is that actually under this particular system, correct, we are able to exercise strict control over branch stock, how that we are going to see later on just in a short while. But before that, accounting aspect now we are picking up. As far as stock and data system is concerned, we are supposed to prepare under it these account. One, branch stock account. One is branch stock account, correct? You are going to prepare branch stock account. You are going to prepare branch stock account 1. Then you are going to prepare branch adjustment account. Branch adjustment account. Branch adjustment account. This is another account which you are supposed to prepare, branch adjustment account. One is branch stock account. Another one is branch adjustment account. Then you are supposed to prepare branch profit and loss account. Branch profit and loss account. Branch profit and loss account. Then you are supposed to prepare branch debtors account. Branch debtors account shall be prepared in a usual manner as you used to actually prepare. Branch debtors account. Branch debtors account. Correct? Besides, if there will be any fixed asset, then you will prepare fixed asset accounts separately. Fixed asset account. Similarly, you may have to prepare petty cash account also. Petty cash account also, depending upon the question. So as far as accounting concepts are concerned, you must have seen by now actually that under this particular system there is no common account like branch account. So it's pretty wide actually. There are much more accounts than we used to prepare so far, or we were preparing so far, to be very honest with you. So now in this case, how to prepare these accounts? As far as branch stock account is concerned, it will encompass only the transactions relating to goods. Correct? For example, in this case, we will write opening stock of goods. Similarly, when head office will send goods, we will write here 2 goods sent to branch account. Correct? 2 goods sent to branch account. Is it clear to you? If opening stock is written over here, you are going to write closing stock over here without any doubt, isn't it? Closing stock. So whatever closing stock is there, you are going to write it over here. Now, we have just done the invoicing questions and we have seen over there actually that if goods are sent at invoice price, and most of the time actually head office would send the goods at invoice price. So if goods are sent at invoice price, we will have to do some what we call adjustments with respect to loadings. So in this case, if there is opening stock, we are going to write here loading. That means under this system, under stock and debtor system, branch adjustment account name itself is suggesting it is adjustment. It is doing adjustments with respect to loadings. All the loadings will be encompassed here. Is it clear to you? However, loading will always be done on the opposite side. For example, opening stock is on the debit side, so you are going to write the loading here, in fact. So loading on opening stock. So on opening stock, loaded element will be written over here. Similarly, loading on goods sent to branch account. So if there is any loading on goods sent to branch account, you will write here. Similarly, if there is closing stock, loading part will be written over here. Load on closing stock. So if there is any loading on closing stock, you are going to write it down over here. But you must also understand the significance of branch adjustment accounts, because without understanding the what we call deeper significance of this, it is futile to do this particular question, this particular concept. See here. Suppose I'm just taking an imaginary case. You need not require to write anything. Suppose head office sends goods to branch. Head office sends goods to branch at 25% margin on cost. At 25% margin on cost. Now, if I am going to prepare the equation, it will be like this: cost price plus margin or loading is equal to invoice price. Rate is on cost. Say 100, then 25, it is 125. So rate on invoice price will be 1/5, isn't it or not? Suppose goods sent on invoice price is 5 lakh. You need not require to write here. Then I am going to write 5 lakh here. Goods sent to branch account. Is it clear to you? Presuming there is no opening stock. There is no opening stock we are presuming. Then goods sent to branch account will be written over here at invoice price. And I am going to write its loading here. 5 lakh is the invoice price, and I will take the rate as 1 by 5, and I am going to write here 1 lakh. Isn't it or not? Presuming, before that you must understand that goods which you are sending, goods sent to branch account, the cost price is 4 lakhs. Cost price is 4 lakhs. And invoice price is 5 lakh. Because loading is 1 lakh. It means loading, which is your profit, is 1 lakh. Suppose if branch is able to sell all the goods, then what should be your profit? Obviously, you would say your profit is 1 lakh. That is, it should be equal to rupees 1 lakh. Am I right or wrong? Absolutely right. If I am sending you goods worth costing 4 lakh at invoice price of 5 lakh and you are able to sell all the goods, my profits would be equal to rupees 1 lakh. No questions about that. But you must also understand one thing, that I have written loading amount or loaded amount over here. If I am going to close this account, it will reflect a balance of 1 lakh. This 1 lakh is nothing but your profit. You are getting my point or not? So basic purpose we would see later on of branch adjustment account is not only to wipe out loading, but indirectly help us in finding our gross profit, because the difference between sales and cost is nothing but your gross profit. So that is the reason actually we are going to have balancing figure as gross profit in this particular account. Is it clear to you? Now just take the case. Suppose I sent 5 lakh worth of goods, presuming at the end of the year 25,000 worth of goods remained unsold. If 25,000 worth of goods remained unsold, it means I am going to write their loading on the debit side, and loading will be 5,000. 25,000 into 1 by 5. Everyone knows that loading of closing stock is done on the debit side. But very few people are aware of the real fact. The real fact is that we are going to put the loading amount here because this is nothing but this is our unrealized profit. Because these many goods could not be sold out, so we are not able to realize the profit margin which is included in it. Isn't it or not? So when we are putting up the loading on the debit side, indirectly we are decreasing our profit. You must understand that. Isn't it or not? So it means now I can say my profit is 95,000. So that is the reason actually why the loading of closing stock will be put on the debit side. You must also understand it from this particular facet. Is it clear? Out of 5,25,000 worth of goods remained unsold. When you sent 5 lakh worth of goods, you wrote down entire loading, entire profit on the credit side. But at the end of the year, you find actually that 25,000 worth of goods haven't been sold out. So what will you do? You will have to extract your profit margin out of it to find out your net profit. So your profit is 95. So that is the reason actually that loading is put on the debit side. So you not only should know where loading should come, you must also know why it is coming down either on the debit side or on the credit side. That was the purpose to remind you regarding that. Is it clear to you? So, similarly, we would see later on that in this account we write cash sales and credit sales both. Cash sales means sale of goods, cash sale of goods, and credit sales means goods sold on credit, credit sale of goods. So credit sales of goods will also be written over here. The main question is why we write sale here. We would see later on that basic purpose of preparing branch stock account is to have a good stock policy. There is no point in sending unnecessarily goods to you if you are not able to sell it off. So when I am preparing my branch stock account, it will deliver me a good picture that whether the goods which have been sent by us, are you able to sell them off or not? Suppose you are not able to sell entire lot of goods, then what will happen? Next time I will be more alert and I will send you lesser number of goods, isn't it or not? For example, suppose I sent you goods at an invoice price of 5 lakh, worth rupees 5 lakh. This is the invoice price, correct? You must not forget that when head office sends the goods at invoice price, head office always asks its branch manager to dispose the goods also at invoice price, isn't it or not? Now, suppose out of 5 lakh worth of goods, branch is able to dispose of 4 lakh worth of goods. Let us say 3 lakh worth of goods on cash sales and 1 lakh worth of goods on credit sales. So branch stock account must reflect a closing balance of 1 lakh. It means we shall be able to derive closing stock only if we would write here entire amount of sales. You got my point or not? So if tomorrow somebody asks you why we write the entire amount of sales under this method, the reason is obvious, because unless we would write the entire amount of sales, we wouldn't be able to what we call compute the closing amount of stock. Is that clear? So that is the reason entire amount of credit sales is written in the branch stock account, And credit sales, we should not forget that it also comes in debtors account. Opening balance of debtors will be written and credit sales will be written over here. Under this method, since there is no common account like branch account, there is no common account. So opening balance of debtors will figure only in debtors account. Similarly, cash received from debtors, which is a part of remittances in the first method, will come only in this account. Cash received from debtors. Cash received from debtors. Similarly, if there would be any discount to debtors, it will be written in the debtors account, no doubt about that. Bad debts will also be written in the debtors account. However, under this system, we are preparing branch profit and loss account also. We should not forget it. And discount and bad debts are basically losses for us. So that is the reason actually discount and bad debts. Discount and bad debts are also written. Bad debts are also written on the debit side of branch profit and loss account. Sales return. We have seen actually that sales return always comes on the opposite side of credit sales. Sales return. Sales return is equal to this much. It will be written on the opposite side of credit sales. You should not let it escape out of your memory that in this method we write credit sales on the credit side of branch stock account. Don't forget it. That is the reason actually that sales return are also put up on the debit side of branch stock account. Is it clear to you? Why we write sales return in this account? Just to reduce our credit sales amount. So we have to be a little bit cautious with respect to what we call sales return, because this is the item sometime which confuses us. Then we will take the closing balance in the usual manner. So debtors account is not a problem. Similarly, if there will be opening balance of fixed asset, then we will have to prepare a fixed asset account. Correct? And depreciation we will write by P&L, we will write in bracket depreciation. Then we will write closing balance. Now this depreciation will be put up here. Now you must have seen actually there is no need to prepare separately fixed asset account. We can directly put depreciation here, isn't it or not? Similarly, petty cash, balance brought down. Whatever opening balance is there with the branch manager, we are going to write here. To cash. To cash means amount sent by head office to branch office for petty expenses. So whatever amount has been sent, you are going to write on the debit side. On the credit side, then you are going to write by P&L. P&L means amount is spent by branch manager or petty expenses, whatever you may like to write. This is your amount is spent. Amount is spent, which you will write here. Amount is spent. And then there will be closing balance. Now, amount is spent will be written on the debit side of P&L account. You must have seen actually there is no need to prepare separately petty cash account. In fact, actual petty expenses can be written here. Isn't it or not? In this method, we can simply write amount is spent on the debit side of P&L account. However, in the first method, in the data system, we do not write amount is spent directly. Rather, we write both these items on the debit side of branch account and we write closing balance on the credit side to get indirectly the figure of what we call petty expenses. Now, some other facets. See here. Goods sent to branch returns. If branch will return goods to us, we will write it on the credit side of branch stock account. Why we are writing goods sent to branch return on the credit side? Because we want to show through this account exactly how much of goods have been received by the branch manager. When you send the goods, you wrote the entire loading here. Loading means entire profit here. Now if branch is sending you back, returning you some goods, it means on these goods you won't be able to realize any profit. So that is the reason actually loading of goods sent to branch return is done on the debit side of branch adjustment account. Goods sent to branch returns loading, that is written on the debit side. Similarly, goods in transit. Goods in transit. Now this is the word which you are facing first time in branch. Goods in transit. Transit means still in journey. Correct? Suppose head office sends 5 lakh worth of goods. It is the invoice price. We will write here goods sent to branch 5 lakh. And we will write the entire profit margin, that is loading, on the credit side of this account. Isn't it or not? Now, due to some or other reason, let us say some goods are still in transit. Let us say 50,000 worth of goods are still in transit. Transit means still in journey. It means by the end of current accounting year, some of these goods are not received by the branch manager. Let us say branch could receive only 4,50,000 worth of goods because some goods are still in journey. But the problem is that when we means head office, when we shall send the goods, we will immediately write the profit margin here. But later on we would come to know actually out of that 50,000 worth of goods haven't been received by branch because they are still in transit. So it means on such goods, you will not be able to realize any profit. So that is the reason, in fact, that loading of goods in transit, GIT, goods in transit, is done on the debit side of this particular account. Is it clear to you or not? First of all, we write goods in transit on the credit side. Why? Because we want to reflect exactly the amount of goods received by the branch. 5 lakh minus 50, that is 450. But because we write 5 lakh here in its entire loading down here, it becomes necessary to reduce our profit margin on these goods because these goods haven't been received by the branch yet by the end of current accounting year. So that means profit on these goods is still unrealized. Now, goods transferred, goods transferred, goods transferred, goods transferred, goods transferred. What we mean by goods transferred? See here. Suppose a particular head office has two branches, branch 1 and branch 2. Correct? Head office sent 5 lakh worth of goods to branch 1, and presuming we are doing the accounting for branch 1 account. So in branch 1, branch stock account, we will write two goods sent to branch account 5 lakh. After some time, head office gives instruction to branch 1 to send 50,000 of goods to branch 2. From the viewpoint of branch 1, it will be termed as goods transferred. Is it clear to you? It means branch 1 which received the goods from the head office, now it will transfer some goods from its stocks to some other branch. So goods sent to branch account will get reduced. So that is the reason goods transferred will be written on the credit side of branch stock account. Now, again the same logic. On these goods, branch will not be able to realize any profit. So that is the reason actually loading of goods transferred is put on the debit side. Goods transferred, loading on goods transferred. Is it clear to you or not? Now, we will talk about abnormal losses. First of all, you must understand the meaning of abnormal losses. Abnormal losses means abnormal loss of goods. First of all, we are going to write the amount of abnormal loss on the credit side. Suppose we send 5 lakh worth of goods to branch, we are going to write 5 lakh here and its entire loading on the credit side. Now say some goods have been lost abnormally. It means loading or profit margin on these goods shall remain unrealized because these goods have been lost out. So that is the reason loading on abnormal losses, abnormal loss of goods. Loading on abnormal loss of goods shall be written over here. Now pay attention. Suppose abnormal loss of goods is 10,000 and presuming rate of loading is 1/5. So I am going to write here 2,000. But the problem is that abnormal loss is worth rupees 10,000. We have just written 2,000 here. So rest of the abnormal losses will be put up over here. We will write here abnormal loss of goods at cost. Abnormal loss of goods at cost. We never write full amount of abnormal loss in the P&L account simply because actually P&L account by accounting conventions is always prepared at cost. Is it clear to you? Branch stock account is always prepared at invoice price. Basic purpose of branch adjustment account is to wipe out the loading and help in computation of profits. Is it clear? So that is how the treatment of abnormal losses will be done. Now, if there will be some normal losses, please pay attention. Normal losses. You know better than I the meaning of normal losses. Normal losses means such losses which are very much part of business. The nature of the commodity is such that you cannot help but what we call see such losses taking place. You cannot take any action. You cannot take any preventive measure because the nature of the goods is such that the loss will take place. So these are normal loss. Basically, normal loss in simple words means losses for which you are mentally prepared that such losses are going to take place and we simply can't do anything about it. Normal losses. Normal losses, you are going to write first of all on the credit side. Reason is simple because the goods which you have sent got reduced. Now you have to be extra cautious. In case of abnormal loss, loading is written on the debit side of branch adjustment account and abnormal loss at cost is written on the debit side of branch profit and loss account, isn't it or not? But in case of normal losses, say here, in case of normal losses, both loading and cost part is written here. Suppose normal loss is 10,000 and 1/5 is the loading rate, then 2,000 is the loading and cost part is 8,000, then we are going to debit it entirely to the debit side of branch adjustment account. But why? The reason is that, see here, if suppose I would ask you a very simple question, what do you mean by trading account? Have you ever given any thought why in the trading account we write sales, why we write purchases, why we write all direct expenses, why do not we write salaries, why do not we write rent, why we don't write here insurance? Have you paid any attention? Suppose if we want to make a layman understand regarding the concept of trading account, so what will be your what we call analysis? See, in simple words, I can say, if you and I are going to start a business tomorrow, if you and I, don't say me, if you and I are going to start a business tomorrow, then it will be seen that in yours and mine business, there will be some purchases, of course. If we want to start the business, we will have to purchase some raw material and all. 99% chances are there that we will have to purchase unless we ourselves are the manufacturer. That's the different point. If there will be purchases, because purchases of raw material will require their conversion into finished goods, so we will have to incur some expenses. We will have to call upon some what we call workers who will put in their efforts. Similarly, sometime when we are going to what we call purchase the goods, we will have to spend something on carriage inwards and freight inwards, isn't it or not? What my point is, if anyone starts a business, it is generally seen that he will have to spend something on purchases. He will have to spend something on direct expenses. And if there is a business, he will definitely have some sales also. But now pay attention. We are starting a business. You are also starting a business. Even I am starting a business. In your business, there are expenses in the form of salary, in the form of rent, in the form of insurance. But I don't have any salary expense because I can manage the entire work. I know the account. I'm a married person, so even I can do the household chores also. What my point is that these are avoidable expenses. These are controllable expenses. Whatever expenses you had been writing right since your what we call class 11, 12 until up to this particular stage on your P&L, you should understand that actually these are basically controllable expenses. For example, you might be having what we call lot of spending on this mobile, but I'm not acclimatized to it. And most of the time, actually, I keep on hearing complaints, sir, please give us your number. There is no point in giving the number because I hardly use mobile, to be very honest with you. So the reason, my point is that these expenses are in my control. Suppose I have got my own space, I need not require to spend a single penny on rent. Is it clear to you or not? Are you getting my point? What my point is that whatever we write in trading account, that is a journal thing. It is seen mostly in business. But in this account, we can write something, we may not write something. Are you getting my point or not? If I don't have an expense in the form of salary because it is in my control, I can hire a staff or I can do the work myself. So these are controllable expenses. So uncontrollable ones are put on the debit side. It means trading account basically reflects the normal happenings of the business. Whatever normal things which keep on taking place are always incorporated in trading account. So don't let it escape out of your memory that branch adjustment account, which we would see later on, ultimately will give us gross profit. It is nothing but it is a country cousin of what we call trading account. It is similar to trading account. That is the reason normal losses. Normal means which are normal. I have already told you all normal activities are incorporated in the trading account. So that is the reason, in fact, that entire normal loss is put on the debit side of branch adjustment account. It is not split, unlike abnormal losses. Abnormal losses is split into two categories. Loaded part is written here, cost part is written here. And normal loss, you can directly write the full normal loss in the trading account. You got it or not? Because it's a normal activity expense, it's a normal activity, and it should be what we call charged to that account which encompasses the normal activity. That is the reason normal loss entirely put down over here. Is it clear? Now there is nothing else to what we call talk about. Now we shall close this account. If I am going to close this account, please pay attention, then there is a possibility that I will have the balancing figure towards the credit side. It means my debit side is more. Then this figure is known as deficiency. It is known as deficiency, or you can write as shortage. Shortage. Deficiency or shortage. Remember one thing, deficiency or shortage is nothing but it means goods which are not in proper condition due to mishandling or some or other reason. It is similar to your abnormal losses. Is it clear to you? That is the reason their treatment will also be similar to abnormal losses. So if there is balancing figure here, we will take it as deficiency. And the loading of deficiency will be done here. Deficiency, loading, and deficiency at cost shall be written over here. Deficiency at cost, we will write it over here. Deficiency at cost. Is it clear to you? Now, if there is a balancing figure here, then obviously I am going to take it as surplus. Surplus. Now you tell me, most of us do business to incur losses or to have surplus. Of course, surplus. That means surplus is a normal activity part of business, and losses is something which is not normal. You are getting my point or not? Since surplus is a part of normal activity, it is not split, unlike deficiency. Entire amount of surplus will be written on the credit side. Correct? Entire amount of surplus will be written on the credit side of branch adjustment account. Before I move further, just to make one point clear, one should not take blindly balancing figure as deficiency and surplus. For example, if in a particular question, balancing figure is appearing on the credit side, correct? Your first preference should be closing stock. But 99% closing stock is given in the question. That is the reason we take deficiency as the second alternative. Similarly, if the balancing figure appears on the debit side, your first preference should be opening stock. If opening stock is available, then your second preference should be goods sent to branch account. But 99.99% opening stock and goods sent to branch shall be given in the question. Then you will take surplus as the what we call option. Now, you will tally your branch adjustment account. Branch adjustment account will be tallied, and you will write here gross profit. Correct? You will write your gross profit. This gross profit will be carried over here. Gross profit brought down. If there will be any insurance claim, remember one thing, insurance claim is an income which is not due to what we call sale of product. Any income which we derive not due to sale of product is indirect income, and indirect incomes are written in the profit and loss account. That is the reason you used to write commission received, rent received, discount received on the credit side of your P&L. That's a different thing. We never paid any attention to it. Correct? And now we will compute our net profit. So that is the beauty of this system, that we can arrive at gross and net profit separately, and we can exercise a good control over stock because we prepare branch stock separately, and the relevancy of debtors account is not very high. However, if in a particular question credit sales are not given, if credit sales are not given, then this particular account will become significant, because in that case you will have to first of all tally debtors account to get the credit sales figure, and then you will take it over here. So that's all which we are supposed to discuss with respect to what we call a stock and debtor system, and definitely we are going to supplement with lots and lots and lots of questions. There are lots of questions already, but for that we will have to wait for the next session, and next session will take place in the next class. So till then, time has come to say goodbye and good night, and also Shabak hai, and then we will hold down a meeting with you on Monday. Correct? So till then, once again, it's a very, very sweet, lovely good night.